Hello, everybody. So I finished listening to the full 2023 Q1 conference call of SoFi Technologies. And I must say, I thought the call was very bullish. I thought there were a lot of interesting nuggets. Now, that's an hour-long call, and so I suggest that you listen to it fully. But if not, here are my main takeaways about the call. So first of all, what I love is that the deposits keep growing. Noto noted that there is $2.7 billion in extra deposits in Q1, and that's totaling more than $10 billion in deposits in total, and which means that they are becoming a medium-sized bank now. They're becoming pretty big because their total lending capacity is $20 billion. They have $10 billion in deposits, $8.6 billion in warehouse capacity, and $3 billion in their own capital that they got from their SPAC and their capital raise. Remember, they raised at the height of the market, and so they were able to really manage that cash really well. Also, newly funded account, 50% of all newly funded accounts set up direct deposit within 30 days, which is to me an outstanding statistic. People who join SoFi, half of them want to get those great interest rates, want to get that bonus, right? So we go beyond that sign up with SoFi and get $10. We go beyond that. We get a lot of customers that actually want to have an account and want to have SoFi as the main financial partner. And the CEO emphasizes that in the call is that yes, they will keep giving the best product, the best rewards to the people who have direct deposit, like that 4.2% savings interest rate on their savings account. That's only for people who set up direct deposit. Same for their better rates on their credit cards and all of that. It's people who set up direct deposit, and thus SoFi is attracting people who actually want to switch banks and not add another financial institution, but switch bank. And the numbers, and I'm gonna make a joke here, but to me, SoFi, I've always called it the bank for the wealthier or more affluent millennial. But when I listen to the call, I get that feel. It's the bank. To me, my understanding of this is they are the bank for the rich millennial or the Gen Z, quote unquote, right? It's a joke, but clearly, while Square, for example, focuses on accessibility and banking the unbanked and banking everybody, clearly SoFi is not going to give you a personal loan if you don't fit their criteria. And their criteria is really, really high, which is what we want as investors. I mean, if that's the thesis, the bank for money-savvy millennials, for quote-unquote rich millennials, if that is the thesis, that's what we want, right? And they have a median FICO score of 749, so of course that's really good. That's very good. But personal loan borrower, the median income is $164,000, right? With a FICO of 747, and the median student loan borrowers as a median income, so half more, half less, of 173,000 with a FICO of 769. You are targeting very, top 10% customers here. And that's why, as they state, they have very low delinquency rates, and it's even below their own models. They keep introducing new products. So this quarter, they've introduced a new product in 3% cash back on travel booked with the SoFi credit card through Expedia, and that is very nice. They've also introduced an AI chatbot. So again, this is a company that's very agile. They really follow the trends and apply the trends to their business model, which I think is once again very, very bullish here. What other nuggets did we see in the call? So, for example, the CEO reiterated multiple times that they want to be the one-stop shop for all members and all of the financial needs of those members. And in order to do that, they acquired a mortgage technology company to help them originate new loans called Wyndham. And a lot of analysts seemed a little disappointed on the call about that. But Anthony Noto noted that it's actually a strategic move. It's not immediately accretive. It's not meant to be. Yes, origination of mortgages are down right now. The market for these companies, the stock value of these companies, if you look in the public sector, is way down, which means that it's the moment to buy them. So they acquired it for a great price, and to them that was a strategic acquisition. If SoFi is to be the main financial partner of its members, it needs to have a mortgage company where they can issue their own loans, and they will likely implement the same stringent financing criteria to that company as they have for their personal loans or student loans. But there's more. We've heard more about the financial services productivity loop. We know that SoFi does its best to cross-sell, and they try to cross-sell. And how do they cross-sell? They use financial transactions that they see from customers having direct deposits. And so you can see whether a customer pays for a mortgage, whether a customer pays for a credit card, etc. And then the system can offer personalized advice and cross-selling and recommendation for other products. And oftentimes it is the system itself, right, through more basic entry-level AI that will recommend a product. And over time, it is a certified financial planner who can go in the system, call a customer, and recommend a product. And so an example of that is that if you are paying a high-interest credit card, but you also have a major amount of money in a savings account, the system can recommend, hey, it's a good idea to actually pay off that credit card. And that's what they call their financial services productivity loop, where they can cross-sell and offer up more products for sale. And wait on the student loan business, because of course Wall Street still believes this is a company that's mostly about student loans. Actually, one analyst mentioned that they could do away with student loans and actually do very well without student loans, which I've been saying for a long time. But Noto seems attached to the student loan business, and he mentioned it again. He said, as long as people can't afford their education, SoFi will be there, and SoFi will help with student loans as long as people can't afford. And he highlighted two main differences about their student loan business. They have a business that is still fine, that is the private loan provider. So, of course, as students go to school right now, they can apply and search for private loan providers, and SoFi will show up and will be a private loan provider, just like you would have Discover or any other company that can lend you on private loans. And they are also what Wall Street identifies SoFi, a private loan student refinance company. They still have that business, but that business is obviously way down right now, as a lot of borrowers either have extra cash to pay their private loans or are just focusing on their public loans and hoping for that Supreme Court decision. But they didn't go too much on that. They didn't spend too much time on that. We will see. I myself, I don't know what's going to happen to the student loan situation. I know that it would help the stock if that student loan situation got resolved. But frankly, this has never been a thesis for me to invest in this stock. It's a cherry on the cherry on the cake if it comes back, but not sure if it will come back. Analysts also criticized, in my view, a lot of financial services, saying, they don't seem profitable. And Noto reminded the analysts about the long-term view. So a lot of the products that they have actually have positive contribution margin, but they are showing right now in the business as unprofitable because the customer acquisition cost is high, and of course the payback is after the customer acquisition cost has been expensed. And so they have a lot of financial services who have a 12 to 24 month payback period. They will show profit as these new products are launched and the customer acquisition costs are absorbed through the first few quarters, where is when you expense the customer acquisition. But over the long run, there will be a positive contribution margin, and these businesses will be accretive to SoFi. And the final nugget is that SoFi will keep prioritizing direct deposit, and that is why they have such high APYs, as there is a lot of customers flocking away from smaller banks, trying to search for yields, trying to buy treasuries, as they see interest rate being high right now. SoFi is likely to be one of these banks who want to capture these new customers because they're able to provide these very low margin to SoFi APYs, and so a lot of customers have an incentive to switch to SoFi. And one of the reasons why SoFi is able to do that is because these deposits they can use for their loans, and that is cheaper than them using their warehouse facilities. And that's one of the major reasons why they became a bank. They now can use direct deposits and the money on the checking account or savings account of their customers, and they can use that money within the regulatory ratio. They can use that money to make better loans, whether it's personal loans or student loans, etc. And they also stated, and that's how Anthony Noto ended the stone call, that they are ready for rate cuts and that they will be even more advantaged when there are rate cuts, because that advantageous cost structure is likely to continue for SoFi. So this was it. These were just a few nuggets that I gathered from the conference call. There was much more in the conference call. I highly recommend that you listen to it if you are a shareholder of SoFi. This is not investment advice, just entertainment only. Appreciate your likes, appreciate your subscribes. Have a wonderful day.